This episode of Untold Stories is sponsored by Kava and Ledin. You'll hear more about them later on in this episode. Good morning, good afternoon, good evening. What is up, everyone? I am Charlie Shrem, and you are listening and watching Untold Stories, where twice a week together, we get to dive deep with some of crypto's most influential leaders and really truly understand how this movement came to be. And what I'm really learning is I'm constantly being asked where we're going all the time. Just this morning, someone asked me, where are we going with NFTs? Where's the next investment in that? Where do we go from here? And what I have to do, and truly why this show is phenomenal for everyone, is I just go back in time and I think about the transitions between certain waves that we've had in the past, 2012, 2013, 2014, 2015. And you really can get so much great information, little tidbits, informational arbitrage, and to really learn like where we're going. I'm honored and we're very fortunate today to have someone who's very good at that. His name is Jason Less. Jason, thank you so much for coming on Untold Stories today.
Thank you for having me, Charlie.
You are the CEO of Riot Blockchain, and Riot launched in 2017, but in 2018, you're the first NASDAQ-listed company that focuses exclusively on Bitcoin and blockchain-based companies. I remember when I had first heard about Riot, I was just saying to myself, what do they do? And someone had told me, oh, well, Bitcoin mining. And this is a perfect example. I said to myself very quietly, I said, maybe this is the future of where Bitcoin mining is going to go. Because it's 2017, it's a very long time ago.
Mm-hmm.
You know, maybe we're going to go towards the publicly traded companies route. And fast forward, when they said the institutions are coming, that's where the first institutions actually went, was towards Bitcoin mining, Riot Blockchain. Are we now in like the golden era, do you think, of Bitcoin mining?
Yeah. Well, for a number of reasons. First off, I just wanted to note, I don't know, you probably don't remember, but I used to hop on the Whale Pool TeamSpeak with you, way back in the day with Flibber and those guys. So it's cool for me to be on the podcast, talking to you now.
You're bringing back memories.
Yeah,
a lot of memories, actually. I used to sit on that TeamSpeak. I used to sit on that when I was on house arrest and I couldn't leave my house. I would sit on that Whale Pool TeamSpeak with all those guys just like listening. And my girlfriend at the time, but now my wife was like, what is that? And that was the real time. What is going on in Bitcoin?
Yeah. It was cool. That's an awesome community. So wait, we were talking about the golden age of Bitcoin mining institute. Yeah. So that's interesting that you had that thought back then, that like if this was going to be the future of Bitcoin mining or institutional adoption. And I think it really is for a number of reasons, or I should say it has been for a number of reasons. First and foremost, you and I know Bitcoin isn't easy for a lot of people to use in custody. It's kind of intimidating. A lot of people want to buy Bitcoin. They maybe don't feel great about holding it on Coinbase. So there are certain types of investors that want to just buy traditional financial products like stocks. And what's the void that Riot and other publicly traded Bitcoin miners has filled is investors who want to buy a stock that can serve as a proxy to Bitcoin mining, serve as a proxy to Bitcoin. Bitcoin mining is kind of a great vehicle for that, because all we do is mine Bitcoin. So our financial results, tend to be correlated with the price of Bitcoin, because that's the underlying asset that we're mining. So that is drives what at least the dollar-based revenue that we have. And so as investors have shown interest in publicly traded companies like Riot, we've seen a bunch of other players to enter the market. It's starting to become difficult to keep track of all the publicly traded miners out there.
There's maybe like a dozen, or you've seen BitcoinTreasuries.com, I think, and you can actually see most of the Bitcoin. There's dozens now. There's dozens. In fact, someone could make money just buying the tokens of the publicly traded companies, like hybrid stocks and token type things. Like that could be a portfolio in and of itself.
Yeah. And you're just talking about the ones that are out there now. There are so many more that are in the works. There's I think it was last week, one company had a special meeting to approve their a de-SPAC. And then I think later this month, a reverse a merger is being approved. Companies like Core Scientific announced that they are
Yeah.
going public via SPAC at the end of the year. So there is so much
HUD
activity.
8 recently too.
HUD, yeah, well, HUD 8's been publicly traded. They just became listed on NASDAQ recently. A bunch of other Canadian companies, HUD 8, Hive, Bitfarms, all came forward to NASDAQ earlier this year over this summer. So, I think by the start of 2022, there's going to be like 20 publicly traded miners or something. It's really getting interesting. And what these companies see, they see the investor interest and they see these public markets as a very efficient access to capital. If you're a publicly traded company, if you have a liquid stock, it is a lot easier for you to raise capital than it would be for a private company. So that is key because that's really the name of the game in a lot of ways in Bitcoin mining. There's hardware upgrade cycles that come. If you want to grow your hash rate, you need to raise capital and buy a bunch of miners from Bitmain or MicroBT, Canaan, or any of the new competitors that are coming out there in that space. So what you have now is all these publicly traded companies coming forward or already come forward, raising capital via the public markets and deploying that capital to grow the Bitcoin mining operations. And what I think is especially cool about that, which is part of what Riot's mission is because all of this activity has happened in the United States and North America, we're seeing a huge growth of mining in North America. That's, I think, a real positive outcome to what's going on here. You touched on it being the golden age for Bitcoin mining. I think it is for a number of reasons. For this reason, for the increased amount of public companies in Bitcoin mining, but also obviously the exodus of mining from China that caused a huge difficulty drop, which has been a boon for miners all over the world, particularly those in North America, I think. And you combine that with all this capital being deployed here, North America, the United States is really coming on the map in Bitcoin mining, which is great because one, it smooths out the decentralization of Bitcoin mining a lot more instead of 50 to 70% of mining being in China. And I think it's important that the underlying infrastructure for Bitcoin, for the Bitcoin network mining, is geographically located near where a lot of adoption is. There's so much adoption of Bitcoin in the United States from both individuals, from businesses, institutions. And historically, there hasn't been a whole ton of that mining infrastructure here. And now we have that. So now we have North America, United States as a bigger presence in the Bitcoin consensus system.
I heard that one of the largest Chinese Bitcoin communities outside of China is now in Austin, Texas.
I believe it. It's crazy. I've heard a lot of stories about companies.
It's like moving people too, not just the equipment, the people and that was what I was nervous about too. I was like, oh, thousands of jobs by the, mutual friends of ours not going to be able to work anymore in China, but they're actually coming over too. And it's not, is it 100% North America? Like, you look at the old remittance maps. Is it like 100% China, North America? Where in North America is it actually happening?
Well, I think, miners leaving China, they're kind of distributing all over the place. Obviously, Kazakhstan is a real natural choice for miners leaving China because it is just closer, easier to get to. It does have very competitive energy costs. So a lot of mining going to Kazakhstan. Very interesting. Such a small country is now becoming such a significant part of the Bitcoin mining network. But yeah, a lot coming to the United States and specifically Texas. And I think there's one driving reason for that. Texas is a business-friendly state. Texas is a Bitcoin-friendly state. You have up to the governor's office, Governor Abbott, coming out and saying, we want to make Texas a Bitcoin mining mecca. So for all the Chinese miners that just had the complete rug pull over in China, jurisdictional risk is top of mind.
What percent of the Bitcoin hash rate dropped off in like 1 week's time? It was like a significant, like 30% or something like that, right?
In a week, yeah. I think overall the drop was more like 50% that took place over the month. It was
That's an attack. We were attacked this year by China. Why is no one talking about that? That is a de facto attack against Bitcoin. We have always talked about how do you attack Bitcoin? You ban mining. It's one of the only ways. If this was not an attack, I don't know what was. How resilient is Bitcoin that it's coming back so quickly?
Yeah, this doesn't get enough credit. This is a real bullish thing that happened. For years, the criticism of Bitcoin is, oh, there's so much mining in China. This is such a security weakness, et cetera, et cetera. We just destroy that FUD in like a month this summer. No one talks about it.
It's so
Bitcoin
true.
is resilient like that. The network is resilient. This hash rate can move. It doesn't, you don't need 100% of the hash rate online for the network to drive forward. Blocks come a little bit slower till the next difficulty adjustment, and then we move on. The system was designed for this type of event.
What I'm also learning about Texas too is that because the energy grid, and this was just because of the way America was built, the energy grid just in Texas is kind of a standalone, not connected to the rest of American by significant means power grid. It almost needs Bitcoin mining. It needs Bitcoin mining because there's no other way to load balance, from what I'm understanding. And I'm not a Bitcoin mining aficionado at all.
No, you're exactly right. I mean, I think Texas has a great energy market. It has an ideal energy market. The energy market in Texas is known as ERCOT, and like you said, it's an island of energy. It doesn't connect within to other states really. It's 90% of Texas is connected to this ERCOT grid, and it is a deregulated energy market. There's not politicians driving generation choices, generation approval, distribution, pricing, like we have in California, which we have incredibly high energy costs. Texas took the deregulated approach. And through the market that's been created there has been this real abundance of renewable sources like solar and wind being constructed there. First and foremost, Texas just is environmentally ideal. I mean, Texas has more wind turbines than any other state in the country. Because of the environment, it's very ideal for solar. So there's so much of that renewable infrastructure that's been built and is in queue to be built going forward. And because those sources are intermittent and somewhat unpredictable, you need loads like Bitcoin mining to help balance that. You need loads like Bitcoin miners to be the buyers of energy of last resort in any location, who then also have the flexibility to shut down when power comes in higher demand. So what I tell people is Bitcoin miners in Texas, they don't have necessarily this explicit contract agreement on how they are going to interact with generation sources. But through that open and free market, there's this kind of implicit relationship that happens where we are all just following market forces. When the price of energy is low, Bitcoin miners are going after that. When the price of energy rises because demand is high and supply is limited, then Bitcoin miners tend to not be buying that energy more, and oftentimes is selling the energy they had back to the grid. This helps stabilize the grid, and this helps make the grid more robust. With what happened in Texas with that winter storm in February, and what often happens in summer, I get a lot of people reaching out. Well, hey, aren't Bitcoin miners just taking away all this energy?
That's what I was going to ask you. So what do you answer to them?
Not at all. Because miners are so sensitive to the price of energy. We can't afford to be buying energy when it is super expensive. So let's talk about that February winter storm, because that's one of the key examples that comes to mind. Energy prices were shooting up to $9,000 a megawatt hour. Bitcoin mining is not profitable at $9,000 a megawatt hour. Okay, so you're just out. You cannot be mining that. So if you did not have low power prices secured by way of a power purchase agreement or some other mechanism, you just were not mining. You were just shut down. Now, if you did have that power secured, like, for example, Riot's Windstone facility, we did not own Windstone at the time. We bought them, that transaction closed in May, but they have a long-term power purchase agreement, which means they are taking or paying for power for over the course of 10 years, no matter what. They've taken that risk to secure power. Bitcoin miners can do that because we know we're going to be buying energy.
Well, and that's a good thing because the local infrastructure there can use that guarantee of a contract to reinvest into the local infrastructure there. So that's why it's a benefit. It creates a good market.
That you're absolutely right. So that's one huge benefit on that end. Then the other end, so we've secured that power. And when events like that February freeze happen, miners, if they secure the power, it is in their best economic self-interest to sell that power back to the grid. So what you have here is
I
a
make more
block of
money.
power. You make more money than you will with Bitcoin mining at certain prices, especially the 9,000 a megawatt hour.
Yeah, Riot becomes an energy broker. That's what do we do now? We don't mine Bitcoin. We just broker energy in Texas.
Well, what I tell people is Riot and it's a subsidiary like Windstone operate like a virtual power plant. That power. Okay, maybe Windstone didn't generate that power, but it owns that power because it bought it. And like you touched on, Charlie, the infrastructure, could be built, and there's economic growth that happens around miners securing those huge blocks of power. So that power is now available, and when power is in high demand and low supply, miners can sell that power back to the grid, and that's what helps stabilize the grid.
There's no denying that the world is changing, temperatures and things like that. But I feel like I've been lied to my whole life from the environmentalist side, but also like the anti side. I've never learned what that perfect balance is. And one of the things that I was told was that energy is finite. If Bitcoin miners are taking it, then the hospitals are not getting it. That's you've been before Bitcoin would even existed. As a kid, you'd hear all these negative things that we need to use the energy for better things. But how is that not true? Because we've literally had power generation sources executives on this show telling me that as soon as you generate that energy well, it's coming from the ground, natural gas, or however you're doing it, water, it degrades immediately. So the farther that energy has to go and the longer it takes to get there, it's not worth it anymore. It degrades almost immediately to a point where having the Bitcoin mining on the sites where the power is generated matters so much. Where am I wrong on that?
You're absolutely right. Energy is lost in all sorts of ways. It is generated, and there's no one to buy it. It gets lost in transmission
All the time, every day.
It is staggering. 1/3 of all the energy that is generated globally is wasted. Okay, it does not get used. Isn't that crazy?
Why are we not focusing on capturing that as opposed to like, hey, we need to get rid of gas cars by 2025 to all electric cars? Meanwhile, electric cars generate more fossil fuels than gas cars probably do, just how they're built. I don't understand where we went wrong in society.
Yeah, yeah. It's a great point. It's very puzzling. We should be trying to capture and resolve inefficiencies, not drive them further forward. Humankind, the human race, the world has benefited so much. Quality of life, duration of life has improved dramatically as society has used more and more energy over time. It's just very clear. Energy has provided a higher quality of life. So our goal should not be to use less energy. Our goal should not be to, try to move back in time. I think our goal as a society should just, like we're talking about, become more efficient. Use things like Bitcoin mining and other loads out there to identify lost energy and capture that. 1/3 of global energy that is produced is just completely wasted and unused. And Bitcoin mining helps solve that problem.
I wanted to congratulate our sponsor, Kava, because Circle chose the Kava platform as one of their newest blockchains and protocols they're going to be launching USDC on. Traditionally, USDC has only been on Ethereum and one or two other chains like Tron, but now there's a bunch of other blockchains. The Kava platform is one of them, and you can access all of those super cool DeFi high yield opportunities that are on the Kava platform now with USDC, which we know and love. So check them out at untoldstories.link/Kava. And congratulations, guys. Having Circle choose y'all as the top blockchain for USDC to be launched on is a big freaking deal. Today's show is brought to you by our newest sponsor, Ledin.io, a better home for your Bitcoin. And they are amazing. They're secure, simple, and such an easy to use platform for managing and growing your digital wealth. You can earn interest on your Bitcoin and your USDC with some of the industry's best rates, 6.1% APY on your first two Bitcoin and 9% APY on your USDC. You can use your Bitcoin as collateral with their Ledin loans to get quick access to dollars or to double your Bitcoin savings with their popular B2X loan. If it sounds too good to be true, It's not, because they've partnered with Armanino LLP to provide proof of reserve attestations. That means in a few simple clicks, you can log in and you can verify your assets on Ledin are fully accounted for. And this is truly first in class transparency and accountability. And I'm excited to get to the meat of what we're talking about here. We're giving $50 away in free Bitcoin to everyone. All you got to do is go to untoldstories.link/LEDN. And we're giving $50 to anyone who goes on and creates a new loan. And that can literally pay for your interest in the first half of the year, depending on the size of your loan. It's an interest-free loan. Why not? Might as well do it, right? untoldstories.link/Ledin. Thank you guys for being amazing. I think Satoshi needs to be given like the Nobel Peace Prize for saving the world on the environment, or
and actually, people have already talked about giving it to him for economics. Now he's going to get it for energy too. He's racking up a good amount of awards.
Well, if you think about it, that it not only stabilizes grids because it allows you to build microgrids. Because what you can do is you can say, okay, we have the middle of nowhere tundra. Even in space one day, we want to build power generation sources. Yeah, we can build 100 homes on whatever planet it is, or even Earth, right? Let's just say it's here in the middle of the tundra. But if you're going to build a power generation plant, you need that other balance when the times that you don't need all that energy that you're generating. You can't predict how much gas is coming out of the ground. Flaring, you see the cell phone tower looking things that have gas, in the old Iraq Desert Storm movies, that's all just burning energy. It's just wasting energy.
And that is a tragedy. And for, to use the age old phrase, Bitcoin fixes this, especially with the flare mitigation stuff, the companies like Great American Mining and Crusoe, et cetera, that are attacking that opportunity. It is amazing the positive impact that Bitcoin mining can have, and the good energy prices they can drive for themselves in doing that. And to me, it's not just about capturing these energy, fixing these energy inefficiencies, but there's a lot of job creation and infrastructure development that happens around this as well. And I think a great example of that is our Windstone facility out in Rockdale, Texas. Rockdale is about an hour outside of Austin to the north on the way to Waco. It was a huge town going back to the 50s. It was the site of they were generating power there, but that was being geared towards an aluminum smelting plant that existed there, owned by Alcoa. Huge plant.
Great for the environment, by the way, right? Smelting plant. Great for the environment.
This facility was employing thousands of people. In 2008, they went out of business. So this whole kind of remote community of Rockdale was really hurt hard. One of those communities where this one business, this one industry was driving so much of the economy around there. And they went out of business. That's really tough for the town. That hit them hard. And Bitcoin miners, so Windstone came in, and they're just looking for the cheapest energy. They don't care where it is. They'll build them. We can build Bitcoin mining facilities wherever. And that was their goal. So they found this community. They found a community that was welcoming, that wanted to work with them, and that they felt they could give back to. And that is where they built this facility. So Windstone is now the single largest Bitcoin mining facility in North America, if you measure by developed power capacity. They've created about 125 jobs there from doing that, and they're just getting started. We are growing that facility in a really big way. We have development plans underway right now that's over doubling the power infrastructure there. So that Bitcoin miners are not only coming in and solving, I think, these energy inefficiencies, but they're also creating these jobs in communities that need them too. I think that's a story that doesn't get told enough, because a lot of times people think about Bitcoin mining as just like guys are just throwing 10,000 computers in a warehouse, turning them on, then walking out. But if you really want to build this infrastructure, high quality, large scale, and you really want to maintain it, you need a lot of talented people on the ground working on that.
Where are we headed in terms of innovation in this space? Because we've seen the industrialization of mining. We've seen the high capitalization, billions and billions of dollars flowing into it. We see software. I had a gentleman on our show, and I'm blanking. I'm going to have to fill it in the editing process. But we had him on the show, and he runs software that I think Core Scientific uses that allows Bitcoin miners to have more transparency oh, why am I forgetting when it comes to voting on software and things like that? I'm forgetting it's because we talked about if Satoshi would be against mining pools nowadays, and we're dispelling some of the FUD on mining pools. But how is the software being changed? Where is the innovation headed now in the space?
Well, I think a key point of innovation right here, right now, is with Stratum V2. Stratum V2 is another type of mining pool protocol. And so historically with mining pools, with Stratum V1 right now, miners like Riot, so we participate in a mining pool. That mining pool, they put together the block template. They select the transactions. If there is any type of signaling going on for any type of upgrade or otherwise, they are making that decision. So they come up with these work shares and they just send them to miners like Riot, and
Yeah.
we do the work and turn it back when we have successful shares, and so on and so forth. So we don't have any optics into what's going on with the transaction selection process or
But
signaling.
do you want it? Do you want those in case, what if there was, you're ideological like me, what if there was a potential fork? How would you, at what point do the Riot shareholders, is it you who makes that decision? Is it the pool? What happens there?
Yeah, that would be a tough one. If you're talking about something like 2017 happening
Yeah.
again, where deciding between signaling for BIP 148 or
Segwit 2X or whatever it
Lego
was. Yeah.
2X or all of it. I mean, that it would be very interesting to see that situation play out today with all sorts of Bitcoin miners. I think for a publicly traded company, it's the job of the officers of that company to
I
decide
agree.
what's
Yeah.
in the best interest of the shareholders. And I think if they choose wrong, then they're going to have shareholders to answer to. Um, I'm not too concerned about that. I think Riot would make the right decision, and I think there's a lot of other good people out there that would make the right decision around that kind of voting
Yeah.
mechanism. But with regards to at least transaction selection, that is becoming a bit more questionable. When you look at stuff like what's going on with this infrastructure bill, where they want to define brokers as people who are processing any type of transaction and reporting on that. So, as mining pools work now, I don't really
Scary.
think miners fall into that because miners like Riot, we have no visibility into what the transactions are. We are actually not involved in transactions whatsoever. We're doing proof of work. The mining pool is doing transaction selection, verifying transactions, and coming up with block templates. Miners like Riot, who are part of a pool, all we are doing is work. So if we were using Stratum V2 and we started selecting our own transactions, then that becomes maybe a bit of a challenge from a regulatory standpoint. I am optimistic that that language and that whole type of provision can be worked out. If that bill does pass,
Yeah,
which
but
it
I
will,
don't want to
work
rely. I'm sorry for interrupting you. No, no. What were you gonna say? The passage. Sorry.
I was just going to say, I'm optimistic that this stuff can be clarified after this bill is passed because it's very unfair and unreasonable right now.
I don't want to rely on that. I
Yeah.
don't. I don't want to rely on the on yeah, please government make the laws good for us. That's not why we're here.
Hmm.
How do we make this technology guarantee our sovereignty? That's why I'm here. How do we
Hmm.
make the technology of Bitcoin prevent anyone from actually being involved in the transaction selection process? Because you and I know that's where it's going to go. You're going to
Hmm.
have blacklists, you're going to have miners. There will always be those mining pools and those miners that will allow all transactions to take place. But we're going to get into a world, and it's a scary world, where you're going to have transaction selection and blacklist and whitelisting. And before we get to a point where I feel like, and do tell me if I'm wrong, because I'm just a podcaster. I mean, you're the CEO, you're on the front lines, so you know better. But this is scaring me now. We need to build the technology up now so we can never be in a place where we can say to the government, yeah, we can select transactions. Or should I not be scared about this at all?
No, I think that type of regulatory risk, I think, is very top of mind. I think for anyone in the Bitcoin industry, not just Bitcoin miners, we're all thinking about the regulatory risk and what can happen. And the more and more government attention we have on Bitcoin, the more and more real that becomes. I think that that type of whitelisting and blacklisting ultimately just fails because of the way Bitcoin was designed. Like you said, there's always going to be some mining pool out there that is, in another country, because Bitcoin has no borders, that is not subject to those type of requirements or restrictions, and it's just going to, try to be collecting transaction fees.
And data can be encrypted. True, the transactions won't go through those mining pools anymore that have blacklisting. Oh, good point.
So, I mean, ultimately that type of law, that type of regulation just kind of puts miners subject to that at a competitive disadvantage, because the way Bitcoin works, those transactions are going to be processed anyways.
You were a professional poker player way back when, and in fact, we did some. It just goes to show you the awesome researchers here at Untold Stories. There was a man versus machine at Carnegie Mellon University that was trying to be the world's best poker artificial intelligence, and you were one of like the human benchmarks for that. That's kind of cool. What was that like?
Yeah, that was awesome. So I became I played poker for about 14 years. That was my professional focus, and through doing that, I became one of the best heads up no limit players in the world. So heads up meaning one-on-one poker.
That's where I fail at too. When I'm in the last two me with someone else in the end, I can't. It's a whole different game. Heads up.
It is. I really feel like it's the purest form of poker, and it's the most fun because you're playing every hand. It's not like you're worrying about other players at the table. You're playing every hand, and I think that makes the game a lot more interesting because bluffing becomes more and more important, and not getting bluffed becomes more and more important. So, became one of the best in the world at that form of poker, and through doing that, I had the opportunity to participate in this man versus machine challenge at Carnegie Mellon. They had been working on artificial intelligence for years within the academic community. They had this annual competition where different groups would have their AIs compete against each other. Carnegie Mellon, they built one. They started to feel they had an opportunity that they could take on the best humans in the world. So in 2015, we did this challenge, playing me and three other top professionals did a challenge in Pennsylvania, Pittsburgh, playing this AI. We played just all day, every day for like 3 weeks. It was super grueling. And the human team was successful in that. But it was an awesome experience. You think of things like, Deep Blue versus Gary Kasparov and like those type of historical events where it's man versus AI for dominance in a given game or area. And it was super cool to be a part of that. Like we felt like we were representing humanity and we were fighting back against the computers by doing this and showing that our skill set was so strong that not even artificial intelligence was at our level yet.
And
so the human team was successful. And then we did a rematch in 2017. Carnegie Mellon came back and they said, "Hey, we have a new version. We'd like to redo this challenge." And they just absolutely stomped us. The improvements were substantial. It was almost scary how much the artificial intelligence had improved. And not long after that, I was like, you know what? I'm just going to focus on Bitcoin now.
What is it about? Tell me about Heads Up Poker in terms of what are some like top 3 things you need to know? You're going into it. What should I be thinking about? How should I be playing? And we may be sitting across the table together one day.
Yeah. I think I kind of touched on it already. With Heads Up, it's very important it's not like a full table where you can tend to do, okay by just waiting for good hands. Okay, you need to be bluffing and such as well, but you're generally not playing that many hands. In some positions, you're maybe playing, 12, 14% of hands only for opening. And with Heads Up, you're opening like 80, 90% of hands. I'm not sure what strategies
so you really should be folding just like 1 out of 10 in Heads Up.
Right. So you're playing a ton of hands. So and your opponent is too. So what ultimately ends up happening is it's not about these good hands and big hand versus big hand. It's about fighting for all these small pots. It's about bluffing and taking away all these small spots, chipping away over and over again at your opponent. And then on the other side of that token, it's all about you not being bluffed yourself. You want it to be you want to have a balanced strategy such that you aren't being exploited by your opponents like that. So it's, to me, I think the key answer to your question is bluffing, not being bluffed, and fighting for these small pots and not just focusing on the big ones.
I feel like it's a good lesson that you've taken from the poker table to apply it to real life. Not
Yeah,
that poker isn't real life. Yeah.
yeah, I think a lot of the skill set in poker, a lot of the skills you learn in poker are really important to being successful at all areas of life. It's, and so for this first example, fighting for the small pots, not giving up and only focusing on the big things. But I think a really key thing that poker teaches you is strategic thinking, game theory, understanding unpredictable outcomes, and being comfortable with the decisions not always working out the way you planned, but understanding that doesn't mean that they were wrong. We live in a world of uncertainty. We don't know what the future is.
Yeah.
All we can do is make the best decision with the information we have right now.
I struggle with PTSD, and one of the biggest issues is every day becoming comfortable with the uncomfortable, the unknown. And poker has been really helpful to that, like for exactly what you said, because when you're playing it, and what we do is we play like $20 unlimited buy-in type games where it's like not huge amounts of money, but you can always keep playing and everything. And it keeps it fun and friendly when we play at our Crypto versus Hollywood game. But it allowed me to like become comfortable with with that, hey, you're gonna make the best decision, but it may not have the outcome that you want. So you got to trust yourself because you have to keep making those same decisions over and over again. It follows it through. It's very, very nice.
Yeah. And what's important is you don't want to start making poor decisions because you're being results oriented about something working out. You see, in
Oh, that's a
poker,
good point.
just sometimes you get in kings versus aces. That's all it is, right? You cannot avoid that. You're not folding kings. If someone has aces, that's what it is. But that happens too much to someone over and over again. They might start to think like, oh wow, these kings are no good. This is an extreme example. I hope no one's really ever thinking this, but people might start to think like, oh, I can't be playing pocket kings anymore. Like I'm always just running the aces. You can't let the poor side of variance influence your decision. If you are making good decisions, then and you are making those with correct information, you're analyzing that information correctly. That's what's most important. You can use the outcome to maybe take a look at your process and maybe find flaws, but it's very important in poker that you don't let the downside of variance just completely destroy what you know about a good strategy being.
That's actually how I lost. I lost last month because I was just killing it, the best cards constantly, and my cards were so good that the good players that were playing were losing to me because they were playing the right way. I shouldn't have been having all those good cards, but then he said one of them, my friend, he's like, the tide's gonna change and Charlie's gonna keep playing the way he's playing, and he was right. The
Mhm.
tide changed, and I kept playing and I was very predictable, and that so you have to play consistently in the good times and the bad times because then you'll become predictable, I guess. And it's actually perfect with trading, bull and bear markets, Bitcoin. The lessons that you learn perfectly weaves together.
Yeah, and especially, being comfortable with volatility. Even if you're really good at poker, you
Ugh.
know, you're
Ugh.
losing like a lot. Like if you're a very winning player, you're still likely having a losing session 40, 45% of the time. And you go on downswing. You could be playing very well, but hitting like I said, the wrong side of variance, and you could be losing pretty regularly. So when you're used to that type of variance in your results in poker, it makes the kind of the variance and the volatility with Bitcoin a lot easier to stomach. Bitcoin goes on massive moves, and that's for people. I think in traditional financial markets or people what they're used to in variance. This is huge. Okay, and I'm not trying to say it's not, but once you become more experienced with this type of volatility, and once you become more comfortable with it, it doesn't kind of goes into what you're saying. It doesn't take away from your bottom line thesis. I believe Bitcoin is the future of finance. I believe it is the future of money and store value and the way commerce will be conducted and the way people will store their wealth. And it doesn't matter to me if the price goes up or down, whatever percent. That thesis does not change.
I could not have said it better myself. Jason Les, thank you so much for taking the time. CEO of Riot Blockchain, one of actually the first publicly traded on NASDAQ. All right, my
Awesome.
friend, thank you. I'll see you soon at the end of September, beginning of October in our next Crypto versus Hollywood tournament, poker tournament. So I'll see you later.
Let's do it. Thanks, Charlie.